weekend webinar. Thank you very much for joining me. Please take a moment to look over the risk disclaimer, which should now be on your screen. We'll get started. If you're watching the recording, please take a moment to pause the recording and read the risk disclaimer, and then we will begin. Alright, so let's go to the charts and start. We're going to start with Aussie Yen. Aussie Yen, like I said, not looking to be gapping much at the open. I think 93.30 was the last after-hours quotes, or well, pre-hours quotes that I saw, which is basically right at open. To me, Aussie Yen still looks very bullish, actually. We had a very strong up to break lower on Aussie Yen, and we failed to do it. So again, the fact that we breached that 618% fib, we had a nice breakdown pattern. We should have been heading lower, but instead we double bottomed here at about 86.33. From 86.33, we have just marched higher with quite a bit of enthusiasm. We broke and retested this breakout point here, and we're continuing to head higher. So I do like Aussie Yen to the upside. I'm looking for consolidation patterns for the move to continue higher. On the other, if we do see a stronger dip, 92 is a very strong buying opportunity. It's the 100 and 200-day EMAs. And then just below that at about 91 is another trend line retest and the 50-day EMA. So that is some solid support here on Aussie Yen. Only below 91 does the downside start to open up again. Until then, I would be bullish, looking for buying opportunities. Dollar Yen, all right, in my opinion, supports that upside Aussie Yen call. We do have this nice triangle break here on Aussie Dollar Yen. All right, it targets above 106. All right, that is the measured move. We had this nice retest here at the 100-day EMA, right around, I don't know, call it 98. And it's looking to push higher, I think, from here. We do still, again, have, after this strong candle, you might see some consolidation or a little bit of a retracement, but for the most part, I do like Dollar Yen to the upside, as long as we remain above this 100-day EMA, again, above 98. If we dip below this bottom trend line here, call it 97.30 or so, that would open up some, that would start to open up the downside to at least 95.17 is the 200-day EMA. Then that would need to fail before we start to see any sort of major move lower on Dollar Yen. Let's take a look at then CAD Yen and then crude, just so I get the two requests out of the way. Okay, CAD Yen, I'm going to drop down our chart. Alright, here's what I have for CAD Yen. Alright, we had this nice little flag. We broke out, we retested, we moved higher. Now we're kind of retracing again. Alright, I like CAD Yen to the upside. I think above 96.50 could open up some moves higher. The way that CAD Yen's been trading, though, it can't really be my favorite upside. Yen pair, you can see lots of false breaks here. It hasn't been trading very cleanly. In this area right here, alright, that's about 97.27 or so, has been really strong resistance. If we get back above that area, let's call it 97.40 just to be safe, then you could start to see a march higher towards these 101 highs. But this area, for whatever reason, I really couldn't tell you why this particular area has been so strong, but it's been once, twice, and now 3-4 times that it's held. So you definitely want to keep an eye on that region for resistance on CAD Yen. Alright, crude oil. Crude. Alright, got a daily close here below the 50-day, alright, which is significant. As you can see, the 50-day has been crude for a while. We broke below it. We gapped, or, well, I don't even know how we moved below it here. But then rallied strongly back above. Didn't get a close below. Well, now we're going to get a close below. I really think 102.61 is the next stop for crude. That's the 100-day EMA. It's tough to draw a trend line on this right now, but it's something like that. Alright, so we are below that. We are below some significant support on crude, and I think we could start to see crude roll over down towards, like I said, 102.60. Major support for crude, though, is between 99.20 and 98.41. All right, so this area right here. All right, mark this peak. Let me fix that. All right, mark this peak here. And that aligns nicely with the 200-day. All right, and then mark these peaks here. That's your significant support area for crude. If I had to guess, I'd say there's some fib levels in there as well. All right. Yeah, you can see the 50% fib falls right in between that area. So 99, basically 99.15 is definitely the area to watch for crude. If we do get down there, that would be the next buying opportunity. Alright, so that's crude. Let's go to some euro. Alright, the big euro news over the weekend was... I don't have the article up anymore. Was presumed re-election of Angela Merkel, as expected. All right, we had German federal elections today. Exit polls, excuse me. Exit polls have Merkel's party polling at 42%. All right, so not a majority, but she was expected to get a majority, but enough to ensure that she is going to remain the Chancellor of Germany. It's likely that she is going to have to form a grand coalition with the Social Democrats, her opposition party. That means that Germany will likely be a little bit more flexible and friendly when it comes to bailing out European countries, other European countries, namely Spain, Portugal, Greece, etc. The Social Democrats a little bit friendlier than the Christian Democrats, which is Merkel's party. The other big news, two other pieces of big news from the exit polls so far. It looks like the Free Democratic Party, Merkel's allies from last time, aren't going to make it, which would require that grand coalition. And it also looks like the Alternative for Germany Party has a very good chance of acquiring that 5% threshold that Germany requires to take seats in Parliament. The Alternative for Germany Party is the anti-European party formed earlier this year. They advocated withdrawal from the euro. They're Eurosceptic sense. And the fact that if they get seated, it sort of represents the increase in distaste for Europe that may be growing in Germany. Certainly, they're barely going to get 5% if they get it, so it's nothing to like scare the European Union yet, but it's something to keep an eye on going forward, how the German population is feeling about being involved in the Eurozone and the European Union. All right, so the euro is looking to open a little bit higher. I think just on what little relief there is that Merkel didn't get surprisingly upset. The way that euro dollar looks to me right now is very bullish. 137 is basically the next target, I think. These previous highs from February, well, basically late, basically February 1st. So the way that we have this ascending triangle break here. All right, we broke these two previous highs around 134 with a very strong candle after the FOMC decision not to taper. Wednesday, and then we have Thursday, Friday. All right, sideways. That's great. I would love to see more sideways. All right, I'd love to see Sunday, Monday, Tuesday. All right, come off to the side here, form some sort of flag pennant consolidation to try to buy a breakout of. Alternatively, I really wouldn't mind seeing a euro-dollar pullback, all right, down towards these previous highs around 134.30. I'd start to look to get long there. It's about 90 pips or so. Pull back down to there, and start to look to get long pretty aggressively down here for, again, a move up towards 137. That seems to be a very likely scenario here on euro-dollar. One of the more tradable opportunities that we may have this week. Pound-dollar. All right, somewhat similar. Again, triangle break to the upside. The pound dollar is really starting to get stretched, though. I still, again, I've been bullish pound for a long time now. I think the fundamentals for long pound trades line up very nicely. Come on. with a rash of good data out of the UK. We haven't seen the BOE turn hawkish yet, but it can't be that far behind if we keep getting this strong data. Look for a move down towards 159 for a possible long. Depending on how quick we get there, maybe 157. Look for this trend line test. Failing that, look for some consolidations or whatever for an upside move. We jump to the weekly chart real quick on pound dollar. Alright, just sort of keep in mind where we are. We are challenging a significant weekly trend line, and we did see a significant pullback here. But we did put in a close above that 200-week EMA, alright? Not something we've done a lot of. Couldn't do it back here, couldn't do it back here, did it here and then reversed. Did it here and then reversed, alright? Couldn't do it here. So it's not something that happened a lot, but in the last few times we did it, we reversed strongly after it. So be aware of that possibility. If we break this as long-term ascending trend line here, alright, this dates back to early July. If we do break that, we may start to see a little bit of a pound correction here. But like I said, the fundamentals line up pretty nicely for pound longs. So I suspect that any significant dip in the pound would be viewed more as a buying opportunity than anything else. Let's take a look at Aussie. First, let me see if you guys have questions. Yeah, that's I use Thinkorswim mostly for my charting, not for my trading though. I find that they don't in any way sponsor us, and I'm not affiliated with them in any way, but I do very much enjoy their charting platform. Alright, this is Aussie dollar. Again, we're gapping down here on Aussie dollar. I think we're gapping down into some support here. Alright, we breached all the levels that I talked about as being significant, and then we started to pull back here from 95.31. It looks like we're going to open right around 93, which is, there is a putative neckline here, again, if you view this as an inverse head and shoulders, which I think I do. Alright, so we could see a retest. 93.50 is the first level to look at. Looks like we're going to get below there, down towards 93 or so. Another trend line there. Those are all areas I look at to try to start to get long Aussie dollar. For a move up towards 96.76 at first, that's the 200-day EMA. Provides a very nice target for any sort of longs, and it also coincides nicely with this 50% fib. Alright, so that 96.76 to 97 area is a good target to catch if this Aussie dollar move does bounce here this week. Some significant Australian news. Well, it's Chinese news, but it affects the Aussie more than anything. Due out 5.5 hours from now, it is HSBC flash manufacturing PMI numbers. All right, those tend to have a fairly significant effect on the Aussie, so look for some Australian volatility even after the significant gap down. Again, 97 to the upside. It really starts to only look bearish if we lose this 50-day at 92.20, and even then, there's a good bounce level at 91. So it's really pretty tough. There's a lot of support for the Australian dollar here. Alright. Let's take a look at Euro Aussie. Alright, there's some significant resistance here on Euro Aussie. We're going to gap up here. We're going to gap right into this trend line, or this horizontal level, it looks like. Alright, I have this listed right now, or marked right now as a double top, with this as the neckline, about 144.50 or so. Alright, could gap up there and roll over. That would not surprise me. If we do manage to get a daily close back above 144.70, 144.80, that could really open up a squeeze to the upside. All right, a lot of stops giving way here above that level. So we may definitely see that. Look for that. Look for that. If we do get a close back above this level, start to look for some Aussie dollar capitulation and the Euro Aussie to rally fairly significantly. All right, Euro Kiwi. It looks like it's trying to reverse here. Its major level is the 162.40 level. All right, that's the 200-day EMA. That's this horizontal level here. If we get, again, same thing. If we get above here, all right, look for some significant capitulation and a rally in Euro Kiwi. Pound Aussie. Alright, still to me has potential for a head and shoulders pattern. One of the Aussie bullish scenarios that I'm seeing. If we get a daily close basically below 169, alright, it opens up a move down towards 165.50. So a 350 pip move, not bad, nothing to sneeze at. So keep your eye out for that. Pound Kiwi. Alright, Pound Kiwi getting very close to its support level here. 1.9, 1.886 are the next two major support levels. We have another potential double top here. This would be the neckline of that double top, and if we break that, we could start to see a strong move lower. On the other hand, you can also just view this as a broad range. We're nearing the bottom of the range, so look for long opportunities. Kiwi dollar. This is NZD USD. Very impressive rally here. We squeeze back above this resistance area here. That's 81.50 with pretty easily. If we do see a return to those levels, I like it for longs to back up towards 86. Not sure that either of those will A, will get to there, or B, that it'll hold, but that's a pretty decent setup risk reward wise. On the other hand, if we start to continue to squeeze higher up towards 86.75 or so, I will be absolutely looking to fade that move. Alright, you can see how significant. Alright, we're nearing the top of this range here on the weekly chart. It extends up to 88.41, but I'm going to start looking at 86 to try to get short for a move back down towards 78. And if we continue to push higher, I will be eagerly awaiting 88 to start firing shorts again for a move back down towards first 86 and then again 78. The one thing you do have to keep in mind for the Kiwi dollar is they are one of the few moderately hawkish central banks out there. Alright, they are talking about rate increases in 2014. The only people right now actively talking about rate increases are the RBNZ and the Fed. So keep that in mind when you're shorting Aussie crosses, or when you're shorting the Kiwi dollar against like the euro or the pound or even the Canadian dollar. Speaking of Kiwi CAD. Okay, another squeeze higher. This is a pretty ugly chart. There's not a lot I can do with it. Aussie CAD, which we're going to look at in a second, is much nicer. Alright, but you can see it's worth noting we're above that 78.6% fib. Corrections to the upside, or moves back down, seem like good buying opportunities on Kiwi CAD. But I wouldn't want to chase it here. Aussie CAD, alright, this is a very interesting chart. We're holding this ascending channel pretty nicely here. For how much longer, I don't know, but certainly if we dip down towards 95.12, I'll look to buy it. A break below 95 and I'll look to sell it. As far as where we may extend up to, okay, from the highs to the lows, 50%, and the 200-day right around 99, so about 225 pips higher, so I'd keep an eye on that figure this week and next. Alright, let me go through a couple more of the pairs I need to look at. If there's any questions or requests you may have, now would be the time to start asking for them. Dollar CAD, look at 103.71 for possible shorts. It's a trend line retest and the 50-day EMA. Dollar Swedish krona. Alright, nice, very solid breakdown here. Another one where I'm looking for a couple days of consolidation and then a continuation move lower to new lows below 6.25. Definitely be keeping my eye on that one if it's a pair that you like to trade. Euro yen, still very much like it to the upside, but again, after this candle, need to see a couple days of consolidation before I'm willing to chase it. Pound yen might be a little far extended now. I would look, if we do see a return towards this area here, about 156.80 or so. Alright, that's been a pretty significant area, so I'd watch that for opportunities perhaps to try to buy into this trend. But it is a little extended. I think there are some better yen opportunities out there. Kiwi yen, similar to pound yen, a little bit stretched. Drop down towards 80 provides a very nice buying opportunity though. Gold still looks pretty bearish to me. If you trade gold, here's why. Okay, basically trend line break, retest, and it's a pretty convincing bearish setup here. Doji, and then a strong bearish candle right after. That's a very simple, reliable 2 candlestick pattern. Below 130 opens up, I think, these lows at around 1180. So I'd be very, very cautious about picking spots to buy gold. E-minis, watch this trend line. If it breaks, watch the 50-day at 1667, and then the major level is 1650 or so. That's the significant trend line, and the 100-day. That's on E-mini futures. Real quick, pound CAD, like to the upside. All right, pennant break, just need a better, more precise setup now. Euro CAD, testing that 618% fib, definitely one to keep an eye on. If it starts to roll over, we could see a head and shoulders pattern. It's also trading in this channel, so pick your poison on that. I wouldn't really like to fade it here. It looks pretty strong, but there is some significant resistance going on here. Dollar Swiss, last one. All right, next support 90.20 on dollar Swiss. Seems likely that we'll get there, but resistance is this 91.47 area here, 91.50. But I do, again, at 90.20, I will likely be getting heavily long dollar Swiss. It's not a pair I trade very often, but that, I think, is a very strong setup. Euro Swiss, again, Euro Swiss, not a pair I like to trade, but if I do manage to see a trip down towards 122.88, that is that 200-day EMA. Again, I will probably take a flyer on it, get long, look for this topside level to break around 124. That should open up a move back up towards this 126 highs, and then I'll look to get out there. Alright, any questions, requests, pairs, stocks, commodities, indices, indices, that you want me to take a look at, by all means, please throw it out there. DAX. Yeah. I gotta try to remember the symbol for it. Hold on. No, that's the dollar index. Oh, here's the dollar index. That's actually worth looking at. Pretty clear trend line break on the dollar index. 61.20 is resistance. Would be a good shorting opportunity. Alright, let's see if I can find the DAX for you. Indices. Alright, yep, give me a second, Yurian. If anyone knows the Thinkorswim symbol for the DAX, that would be helpful. That's not it. Alright, this isn't gonna help. Alright, here's Euro Yen. Alright, here's Euro Yen. I can't find the DAX symbol. If I find it, I'll post it on Twitter. Alright, so this is Euro Yen. We do have this nice wedge break. I do really, really like Euro Yen to the upside. The problem is some of these trend lines. Hold on. All right. The problem is this candle is super aggressive. I like doesn't hurt the bullet case at all, but just makes your stop placement pretty challenging. Um, your stop would need to be below 130, 136, which would be about a 300 pip stop. So that's not something you really want to do. So really, ideally on Euro Yen, what we're gonna see, we've already started to see it. The sideways crap here. The ideal is that this sideways crap continues for about another 2 days. Maybe even dips down a little bit. Provides a nice flag pennant type opportunity to get long. Until then, I don't really want to take it. Because again, your stop would really realistically need to be all the way down here. That's just too big. But like I said, I like Euro Yen to the upside. If you're a big long-term trader and you don't mind having a 300 pip stop, there you go. But for me, I'm going to wait and look for something a little bit more specific. Other questions? I'm talking a lot about the yen pairs, so it's worthwhile to take a look at the Nikkei, because that symbol I do know. Alright, so this is the Nikkei. Broke out here out of this channel. I've been marching higher. This particular level here, alright, call it 15,000 basically. Pretty decent resistance there. Nice round number. Previous high here. So not surprising if we see it roll over a little bit here, but if we do manage to get above 15,000, would look to me like the all clear for longs. And if the Nikkei rallies, yen pairs usually rally, so keep that in mind. All right, other requests, questions, thoughts, concerns. Tony, I'm sorry I couldn't find the DAX for you. If you follow me on Twitter, that's my Twitter handle. By all means, I will post it as soon as I find the symbol for it. Dollar CAD, sure. Alright, so here's dollar CAD. Oh, mistype that. Alright, dollar CAD. I like dollar CAD to the short side still, but it's about picking your spots. Like, first of all, it's important to note that dollar CAD has been doing shit for, pardon the language, for the last really 3-4 months. Alright, been trading in a pretty small 101 to 104, 106, 101 to basically 102 to 106 range, which isn't like a terrible range, but it's not anything particularly great. It's been a lot of jumpiness in the pair, so it's been on my back burner for a while. I've been doing a lot of CAD crosses because I think that it's a useful stand-in for the US dollar. But I'm not a huge fan of dollar CAD. But a couple levels to look short. 103.33. That's the 100-day EMA. The big one though is 103.70. That's this 50-day EMA and this trend retest. I'm willing to bet that there's also some fib level right in there as well. Yeah, it's the 50% fib. All right, it's funny how those levels tend to line up all the time. So basically looking for something like this, maybe down, I don't even know if we'll get to parity. Then I'd basically be looking for 101. Alright, so it'd be 103.75 with maybe a 104.15 stop. Looking for 102 and then 101 for my targets. Almost certainly not going to look to trade that, but that's how I see dollar CAD right now. Other requests. Anything else? Other requests? Stocks. That's a good question. Do I think stocks will have weakness upcoming? The the bear in me wants to say yes. I can't help but being bearish, just because of the way that I feel like the U.S. economy and the Fed are behaving. But with the promise that stimulus is going to continue for at least another month, I don't think we're going to be able to see a significant sell-off from U.S. stocks. So here's the thing. All right, so we saw a significant stock rally on the announcement that the Fed was going to. I'll pull up the E-minis chart for this. Seems as good of a thing as any. All right, we saw a significant rally when the Fed announced that they were not tapering. All right, which makes sense. More cheap money, more Fed boosting the markets, etc. But you have to look at the reason they said they didn't boost, or they didn't taper. They said that they weren't going to taper because they weren't convinced that the U.S. recovery was strong enough, for that data had suggested that the U.S. recovery and the U.S. economy was still in kind of rough shape. That's not particularly bullish for U.S. stocks. If there are actually real concerns at the Fed that the U.S. recovery is sort of a fake recovery and that we haven't really made that much progress, I mean, that's a little bit worrisome. I think that's what we saw the last 2 days after we had this significant rally. I think the euphoria kind of died a little bit. People got a little edgy with what exactly it means that the Fed's not cutting. And then we had Bullard saying his crap, on Friday, I think, that, we may cut in October now, which I think personally is a load. There's no way they're going to cut in October. Of course, I thought they were absolutely going to cut last month, so maybe I'm not the best person to ask about that. But I don't think that we're going to see them start tapering when they don't have a press conference to explain what they're doing. That just seems really irresponsible to me. So unless we hear that they're scheduling a press conference for October, I don't expect to see any major change until December. If we see 1700, fall with like a little bit of enthusiasm, another strong bearish candle below 1700, I think we see stocks sell off this week. On the other hand, if 1700 we kind of go sideways here, I think we continue to march higher. We are really opening the week at a very significant technical level. Previous highs, this significant trend line, again dating back from really August. So it's been a month since we've been below this trend line. So that's a very big level to open at. With the major Chinese and then European data today and tomorrow, a lot of PMIs coming out, U.S. PMIs. We really could be data dependent here at the beginning of the week to see how stocks trade. I think we're kind of balancing on a little bit of an edge here. We could really go in either direction. So keep your eye on these E-minis. If we see a daily close below 1700, I think we could really see a 30 point loss this week. Down towards about 1670. That's the 50-day. I have a hard time thinking we'll get anywhere below the 50-day this week. And then on the other hand, if we see the markets open pretty strong and we manage to creep up off of that 1700 level up towards 1715, I think 1750 is not an unreasonable target over the next 10 days. So it's hard to say, I think, from here. I think markets are still trying to process a lot of what the Fed said and a lot of what the Fed's been saying since, which isn't particularly helpful that they keep opening their mouths when we're trying to figure out exactly what they just said, and they keep contradicting themselves. So I'd be watching equities very carefully here. I don't really know which direction they're going to go, but I suspect we might know very early in the week. Other questions, concerns, requests? Oh, sorry, I didn't pull up my... You guys gotta tell me when I don't pull up my chart. This is the E-mini chart that I was talking about, Here's this previous high. Here's this trend line. Here's the 1700 level I'm watching. Below there, 50-day at 1666. Managed to creep off of it, 1750. Those are the levels that I'm watching for E-minis. Alright, other questions, requests? slim to none. Debt ceiling talks unlikely to create significant market moves. I know the headline on Market Watch is U.S. stock fears swing towards debt ceiling talks or something. Remember the last time we went through this debt crisis crap? It took up until the very conclusion of the failure for markets to really move. So we may see anytime the market's down this week, that's what's going to be blamed. I don't think that's necessarily. So I think markets have just kind of inured themselves to debt talks for right now. They'll watch them and make sure that nothing crazy is going to happen, but I don't think they're going to be the cause of any major moves. Unless something really dramatic happens, like both Boehner and Obama come out and say we're just going to let the U.S. default. Then we'll see major moves. But just the not agreeing on anything is going to be enough. Tony, if you're still here, I found a DAX chart online that I'll look at. It's not great because I can't draw on it, but I can give you the levels. All right, so this 8.6 figure right here. All right, that's a big level to watch. You can see we may return to these previous highs. There also, I would draw a trend line here, starting at this July level and up through the September figure here, and look for that for support, as well as this significant congestion area right above 8.4. Those are all areas that I would look for support. The DAX looks pretty constructive. I don't see any major reversal patterns developing yet. Any sort of sell-off here is going to be met with pretty significant support at 8.4 and 8.3-ish. 8.5, 8.4, and 8.3. All right, so all three major levels will be well guarded, I think, on the DAX. All right, so I'd also look at there's some trendline resistant support here. If you draw here, retest it around 8.4. So DAX looks pretty bullish here. More so, I think, than U.S. equities. It's easier to see a U.S. equities pullback than it is to see a DAX one. All right. Last questions, and I got to wrap it up and get ready for the market open. Any other pairs, indices, commodities that you want me to take a look at? All right. Pound Swiss, and then we'll call it. Alright, Pound Swiss. Major long opportunities starting at 145 basically, which is 50 EMAs. Below there, significant trendline support, 144.70. Fib levels for Pound Swiss. Okay, that 50%, 145. That 618, 144.37. So basically the same levels. All right. I will be actually looking most likely to start getting long Pound Swiss. If we dip maybe 50 pips lower here early in the week, looking for new highs, longer term trade. Stops below that 618% fib, 144.37. I do like Pound Swiss to the upside. All right, got to wrap it up. Thank you very much for joining me. I really appreciate it. As always, like I said, I'll put my Twitter handle in here. It's not just me trolling for followers. But if you ask me questions, I almost always answer them. If I don't, I didn't see it, so ask it again, and I'll be happy to post any charts and anything that you guys have requests for. So looking forward to talking to you guys soon. If you're members, looking forward to seeing you guys in the chat room. If you're not, think about joining us. And either way, I hope you guys have an absolutely spectacular trading week, and I'll talk to you guys soon.